Dividend stocks are making a powerful comeback in 2026, and investors around the world are starting to pay attention again. After years of hype around high-growth tech companies and speculative assets, the market is shifting. Investors are no longer chasing only rapid price appreciation. They're looking for stability, consistent income, and long-term reliability. And that's exactly where dividend stocks shine. To understand why this shift is happening, we need to look at the bigger economic picture. Over the past few years, global markets have experienced volatility driven by inflation concerns, interest rate changes, and geopolitical uncertainty. In this kind of environment, investors tend to become more cautious. Instead of putting money into risky, high-growth stocks that may or may not deliver returns, they start favoring companies that generate steady cash flow and share profits regularly. Dividend-paying companies fit perfectly into this strategy. Another major factor behind the comeback is interest rates. When central banks raised rates earlier in the decade, bonds and savings accounts became more attractive. But now, as rates stabilize or even begin to decline in some regions, dividend stocks are once again becoming competitive. Many high-quality dividend stocks are offering yields that rival or even exceed traditional fixed income investments, making them especially appealing for income-focused investors. There's also a psychological shift happening among investors. The market cycles of the early 2020s taught many people a hard lesson. Growth doesn't always last forever. Companies that once seemed unstoppable experienced massive corrections. As a result, investors are now valuing profitability and financial discipline more than ever. Dividend-paying companies are often well-established businesses with strong balance sheets, consistent earnings, and a track record of returning value to shareholders. This makes them feel safer and more dependable. In addition, dividend investing is gaining popularity among younger investors. Previously, dividends were often associated with retirees or conservative portfolios, but that perception is changing. With the rise of financial education on social media and investing platforms, more young people are realizing the power of compounding dividends over time. Reinvesting dividends can significantly accelerate portfolio growth, turning even modest investments into substantial wealth over the long run. Technology is also playing a role in this resurgence. Modern investing apps and platforms have made it easier than ever to track dividend income, automatically reinvest payouts, and build diversified portfolios. Investors can now create income-generating portfolios with just a few clicks, something that was far more complicated in the past. This convenience is attracting a broader audience to dividend strategies. Another reason dividend stocks are gaining attention is their performance during uncertain times. Historically, dividend-paying companies tend to be more resilient during market downturns. While they may still experience price fluctuations, the regular income they provide helps cushion losses and gives investors a reason to hold on to their investments rather than panic selling. This stability becomes incredibly valuable during periods of economic stress. We're also seeing certain sectors leading this dividend revival. Industries like energy, utilities, consumer goods, and financial services are known for strong dividend payouts. Many of these companies are benefiting from current market conditions, generating solid profits, and sharing those earnings with shareholders. As these sectors perform well, they naturally draw more investor interest. However, it's important to note that not all dividend stocks are created equal. High yields can sometimes be a warning sign rather than an opportunity. Companies offering unusually high dividends may be struggling financially or may not be able to sustain those payouts long term. That's why smart investors focus not just on yield, but also on dividend growth, payout ratios, and the overall financial health of the company. Looking ahead, the outlook for dividend stocks in 2026 and beyond appears strong. As markets continue to evolve, the demand for reliable income and lower risk investments is likely to remain. Dividend stocks offer a balance between growth and income, making them an attractive option for a wide range of investors, from beginners to seasoned professionals. In conclusion, dividend stocks are making a comeback because they align perfectly with today's market conditions and investor mindset. They provide stability in uncertain times, generate consistent income, and offer long-term growth potential through compounding. As more investors recognize these benefits, dividend investing is no longer just a conservative strategy, it's becoming a smart, modern approach to building wealth.